Market downturns are an unfortunate certainty in the life of any investor. How you react to these downturns is often what separates successful investors from the rest. With the markets currently undergoing extreme volatility, it's easy to become fearful. So with that in mind, here are 4 tips to help you handle a downturn and come out the other side with a healthy portfolio. Number 1, don't panic. The first and most important piece of advice is not to panic. If you panic and begin selling off, you could rob yourself of potential long-term gains. It's very easy to get caught up in the daily news cycle where everything is doom and gloom. Try to remind yourself of the history of the stock market. Between 1854 and 2018, there were 33 recorded major recessions in the United States. Every single one of them saw the market bounce back past previous highs. By selling your stocks, you're locking in a loss, despite it being extremely likely that the market will recover. The hardest thing to do in times of unrest is nothing, but by building this patience, you can put yourself in the best possible position to eventually outperform the market. Number 2, collect your thoughts. Once you've avoided the feelings of panic associated with seeing your portfolio in the red, it's time to collect your thoughts. Specifically, consider your investing timeline and reevaluate your current positions. Short-term thinking can be extremely dangerous to any portfolio. By reminding yourself of your own long-term timeline, you can regain some clarity. Remind yourself of the reasons you already hold these stocks. If the underlying positions about these companies haven't changed, neither should your position. Companies will always rise and fall in the short term, and successful investors will hold on through this turmoil and come out the other end still holding a valuable stock. Remember, a 20-year outlook means each quarterly earnings report only represents 1.25% of the time you plan to own a stock. Large companies won't fall apart over one bad earnings report, so don't forget to zoom out and think long term. Number 3, go on the defensive. With panic avoided and your thoughts focused, you can now look to take action by going on the defensive. First, assess your portfolio for diversity. You should look to diversify in multiple ways if possible. Geographically, by market cap size, and through different industries. Doing this will protect your portfolio by ensuring you aren't overly impacted by centralized and specific market factors. If you want to know more about diversifying your portfolio, we actually have a whole video dedicated to it on our channel already. Next, consider rotating into some defensive stocks. Certain industries tend to do well in an economic downturn, such as utilities or healthcare. Owning strong performing stocks in these industries could help mitigate any wider market issues. Finally, consider anchoring your portfolio with large cap, market leading stocks that will be able to ride out periods of economic strife. Apple and Berkshire Hathaway are 2 that instantly come to mind. Number 4, go on the offensive. Once your portfolio is properly secured against a further downturn, you can consider making some purchases. By making calculated moves, you could secure valuable stocks at a discount. Many investors panic and sell during a downturn, despite their stocks still being really valuable in the long term. This reduces the price of these stocks, meaning they can be bought at cheaper prices. Be careful to only buy what you can afford. Investing a fixed amount every month could be of particular use here to remove some of the emotions from your purchases. This is known as dollar cost averaging. As the Oracle of Omaha, Warren Buffett, once said, "Be fearful when others are greedy, and greedy when others are fearful." And there you have it, 4 of our top tips for handling a market downturn. Have you got any other concerns as an investor that you'd like us to cover? Let us know in the comments below. We'd love to hear from you. Don't forget, for more insights, analysis, and access to our market-beating shortlist of stocks, you can download the MyWallSt app for free, which you'll find linked in the description below. Until next time, happy investing.